We begin with another tech wreck on Wall Street. The FANG stocks fumbling in today's session, adding to an already rough week. Facebook, Amazon, Netflix all posting big losses over the past few days. So is this FANG free fall going to start taking down the broader market? Tim.
Well, you know, some of this FANG free fall is something I think we saw 3 to 6 months ago. Clearly, when you got some of the regulatory headlines on DOJ in June, you saw some big moves. Facebook and Google really had a tough time getting out of their own way. Amazon, which effectively got back up to all-time highs and has not exceeded that. So I'll let the chartists talk about that. But when you think about what the market has been doing for the last month and then the last 4 or 5 months, yes, we saw this interesting rotation into more cyclical stuff about a month ago. But really, the defensive rotation is something that's been alive and well for probably 6 to 9 months, as evidenced by utilities. That is an environment where I don't think you can see FANG outperform. And that's an environment where I think the multiples have finally caught up to a lot of these stocks. I know the multiple on Google, not so much. I know the Google on the multiple on Facebook, not so much. But I think, again, you've got regulatory pressures on top of very high multiple stocks, and we could get into the fundamentals on Netflix, but, you know, I'll leave that for somebody else.
On top of that powerful rotation that you also brought up into value stocks.
Right, into value. I actually think that Facebook and Google could be considered value. I think, you know, for a while they'll just sort of trade with the headlines on antitrust, or but I think it's going to be another 3.5, 4 weeks before we see earnings. To me, that is the ballast for these stocks. If they return, you know, if they continue their growth trajectory, then I think the stocks will be fine. Today, it was off more. Closed. It didn't close in the high, but it didn't. You know, down less than 0.5%. I like Google here. I like Facebook too, even though obviously bad headlines, it could trade down.
You know, you mentioned the chartists. I mean, just looking at Amazon and looking at Facebook, what I think is really interesting today is that these stocks are broken below the uptrend that's been in place from their December lows. You know, I think it is important to remember that when those DOJ and the FTC headlines came out in early June, these stocks got nailed, and they're up considerably from then, but they've really stalled at a point where they never made new highs with the market. The S&P has made 2 new highs since then, and they did not confirm those highs. And when you look at those sorts of breakdowns below those uptrends, you start to say to yourself, okay, what is that next thing? It is earnings. And I'd say for Amazon, this could be a really dicey quarter for them. Last quarter, they saw revenue acceleration. They saw unit acceleration. They had put in place in the spring this one-day prime shipping. But what they also saw is expenses go up, way up. And the stock has really stalled since then. So when I think about Amazon, that's the one I think has got a lot of risk, at least on the expense front. And we know that when these high multiple stocks, this is high multiple. This is not value like your Google and your Facebook. It can be unforgiving. And just think about Netflix now, which is down almost 40% from its highs, never made a new high with the S&P.
I think it's about positioning. I think it is about value. It is about growth. I don't like Google. I don't like Facebook because of the regulatory hurdles. I don't like Amazon. I think it sets up to be a real disappointment. But what I do like is Microsoft.
Apple. Going back to his MAGA.
Right, Microsoft and Apple. I think those are the ones that can lead the market higher. Yeah. Not the FANG. I don't think FANG.
So it doesn't matter. If FANG falls out of bed, in your view, that's not a problem for the market?
No, it's a problem. I don't think we can go dramatically higher, but I don't think we necessarally have to go dramatically lower.
As long as we have.
As long as we have MAG, sort of MAG. As long as we have MAG, I think we're okay there because Apple and Microsoft, those charts look intact to me.
Yeah, I would just mention one point. And one of the things that's interesting about Netflix, and we know it's a $100 billion market cap company. We know the other ones in MAGA are $800, $900 billion ones, and they have a much bigger impact on the broad market. But what's interesting about Netflix, and it goes back to your point about positioning and sentiment, is that this was a much-loved story. People really didn't care that they would lose $3, $4 billion in free cash flow to compete on the content front. And now they do. And that's really what's most.
Subscribers were really growing.
That's right. And last quarter.
So people didn't care about the multiple in Amazon for years as well. Right. And I think you bring up.
But that's my only point. I'm not telling you that's going to happen in Amazon. I'm just saying it.
Well, for all you guys who love your MAGA, and I realize there's different color hats over there with your MAGA, but
mine's blue, his is red.
I don't like the multiple on Microsoft. And I tell you, I think cloud, and we saw this with Amazon, and that may be one of the reasons why Amazon's been under more pressure. AWS is not growing as it used to. The margins are not there. This is a highly competitive, and maybe it's not commoditized yet. And I do think that very few can compete with Microsoft in terms of a multi-platform offering. But there are those that can, and pricing has to come down. It's not going up.
I don't know. I don't know
how the multiple expansion has to be.
I don't know if it has, but when you look at the revenue sources that you see in Microsoft, they're evenly split. Like, you know, with Apple, we're worried that services are not going to come on strong enough. But when you look at Microsoft, they're pretty evenly split. And I don't know if people can compete with Microsoft to the extent that you think they can. That's why I think it stayed on the top of the hill.
But to Tim's point, that AWS did actually see margins go down in that last quarter. That was something that people were concerned about. And ultimately, if they want to kind of protect their market share, they're going to actually have to compete on price. And that's when you get to this commoditization.
Bezos told us, Jeff had told us this was going to be an investment cycle for him. And when he does that, it scares me because it's almost a warning sign where he's just floating out saying, we're going to spend money, you're not going to see any earnings, so just be prepared for that, but we're still cool. That's the way it tells me.
The broader question, though, is in this market environment, do you want to, I mean, would you be worried that higher multiple stocks, and we've seen this already for a lot of the software sector, and cloud stocks for that matter, come off? I mean, isn't this the environment where you sell right now?
Of course. Look, you don't have the growth to justify the multiple, and you have a market that is not growth at all costs. In fact, so it's nice that we saw the rotation into value and cyclicality. But again, I think that was defensive rotation, frankly, with the exception of banks. What we saw in a lot of those names, I think, are places where people feel comfortable hiding, and so that is the environment, and it is as encouraging as it has been that. Hey, we've been looking for market breadth, and people have said, hey, it's not, you're never going to get led this market higher without the transports and the banks. That's nice, although transports.
So is the rotation to Microsoft defensive as well? Is that what you're saying?
Microsoft historically would have been. Mega cap tech would have been defensive. These other names we mentioned would have been.
It's crossed the line.
But I mean, if certainly the Facebook chart and the Netflix charts are terrible charts, as you point out. Those are head and shoulders charts that look like you're about ready to test down to the other shoulder. And these are massive market cap weightings in this market. So we haven't really talked about Apple, but Apple's the one place that I think, along with Google, you have a little bit of a combination of a chart, a valuation, and some momentum.
But with Apple, you don't get a DC trade. You don't get that headwind the same way that you get it with a Google. Google, they're all over.
Okay, but you do have a company that's potentially in the crosshairs of a trade war, right? I think that.
But we know that. We know that. We know that already with Apple, and it seems to be impervious to that at this point. Not that it'll never back off on that, but it seems like the thunder is taken out of the sail. I'm going to mix metaphors at this